Hello. So I hope everybody's having an awesome weekend. This is 50 pips in the house, 9th 02/2014. Not making any trade calls or recommendations, as you and only you are responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclosures, disclaimers on the site, understanding that we're just doing this as a learning service, just to do some technical analysis, all in a learning context as usual. So what's going on here? Well, it's going to be an interesting week. Before we discuss what we said last week, again, keep in mind that really the big focus is going to be on Yellen testifying on Tuesday. It's going to be a major thing. So Tuesday New York session is going to be very, very interesting. And then Wednesday, Carney. We do have Draghi speaking. We do have some unemployment data out of Australia. You know, we've got all the retail sales and unemployment claims out of the States. So there's a lot of stuff coming out, but really the focus is going to be on Yellen and Carney and potentially on Draghi. Okay, so what's going on and what do we expect going into the next week? Well, first things first, if you remember what we said last week is going into this week, we said that basically we'd had some fairly sustained moves and we'd had some retracements, right, last week. And what we said is, the week before, the week that just ended here, we had some retracement. We said that this week that passed was going to be key because it was going to either confirm, right, the beginning of those moves or going to give us more confirmation that they were just healthy retracements, or at least that it was going to be sideways chop or continuation in the most recent direction. And we also said that don't get fooled by action at the beginning on the week. It's all going to be about the Thursday, Friday, right? That was going to be the key. And if you go back, you know, even just looking at the weekly charts, you'll see, if you look at whatever, most charts, you can look at the Dow, you could look at the yes, right? You can see the way we closed the week, right? Completely reversed yen, you know, just completely basically nullified the action we had the previous week. So I think we had a good outlook and we had a good steer going into this week. So a couple of things in terms of the ES, what to look for. Well, what we said is basically we were stuck in this broader range at highs. We also said that it's fairly uncommon for the market to really put in a major top with some sideways action. We'd expect to see some blow off action, you know, some exhaustion at lows or highs. And here we start to get this retracement. We blew through the 100. This is the 200. And we said basically, you know, it was all about 1850s, 1800 and 1750s to the downside. So we finally made it all the way back into those 1750s, big pivotal level. And right here we held. Buyers came in very aggressively ahead of this breakout point. Bam, pushed it right about 1750s. And what we were saying on Twitter when we were starting to move up, either we get a very aggressive press back down, but if this starts to move back through 1770s, then there's a very high chance we're going to have to go back and test those 1800s. So very nice action right back into close 1792. And now going into the week, well, again, it's all going to be about Yellen. What I'm going to be looking at is clearly intraday. You know, these 1770s are going to be important, but unless we get action, sustained action below the 1750s, this still feels to me like we have to fail from higher levels. Now, we could get a lot of volatility. There's still a lot of event risk, but the way this is trading, even if you look at the weekly, it looks like if we fail, we have to fail from higher levels. What I would focus on is, you know, if we make it back into this box, what kind of reaction we get. You know, if the sellers are coming in 1820s, then, you know, potentially get some weakness. But if we keep on going through knife through butter, it's probably going, you know, we're probably going to have to see a retest of those 1850s. So again, very nice action, fairly technical. Even if you look back on a shorter time, on a smaller time frame, you can see how we went down, tested those lows ahead of where we expected the bids to ultimately support, and then, you know, all these wicks indicating that clearly big bids coming in, shorts covering, unable to get any new traction at lows, and very aggressive. Every dip got bought, so really not the kind of move back up you wanted to fade. So that's going to be interesting going to the week. You know, we had a good move on crude. We were looking for a move back in the 100s, etc. So fairly decent action, especially for what we were looking at. On terms of the yen pairs, Euro JPY, what we were looking for, we're looking for a move back into these 35.60s as potential buying opportunities into this 200. Caught a bid quite aggressively, well ahead of that level, right? Started to base here, and then we're right through the 1308s, basically call it 1310s. Now, I would have expected to see sellers coming in here if this was going to be protected. The fact that we're holding here, and especially if into the open and early in the week we hold above 139.00 levels, again similar to the yes, I expect if we fail, we need to fail from higher levels, and I'm looking at 139 to be pivotal for a move inside, 140.90 to the upside, and still these lows here. So clearly this is going to be the pivotal level going into the week. But again, unless we get some quick action to the downside, I suspect this needs to fail from a higher level too. If we're looking at USD JPY, as we went into last week, if you remember what we said in the update, we said everybody's going to be looking at this 101.80. This is the key level, right, into the open. If it holds below, you do not want to stay stubbornly long. If it holds above, you likely do not want to stay stubbornly short. This is going to be the Momo line for the week. As we opened, bam, we went down and we set these lows basically that kept on catching a bid. Very aggressive bids coming here all week. Right after we set that low, every dip back into here was a buy. Moved right back into the 101.80s. First attempt, it got sold, came back, bids supporting again. We moved through. Once we moved through, basically this started to get very aggressive move to the upside, whippy, but still holding above. As long as it holds above 101.80s, looking for this to make a move back into the 102.80s. And then similarly to this action, look at the 102.80s as being the next big pivotal level for a move, 103.80s. So really what we're looking at is 103.80s, 102.80s, and 101.80s. Those are the big Momo levels I'll be looking at going into the week. But similarly, it looks like if it fails, it has to fail from a higher level. It looks like it's got a bid tone. Again, I wouldn't be too much attention to what happens on Monday. Don't forget there's a huge event risk on Tuesday with Yellen. Then what else have we got? So basically, also if you're looking at Aussie, we were looking for this to make a move back into the 0.90 level, and we also expected that level to be defended. So far so good. Everything according to plan as what we were expecting. These 91s and 90s is a big pivotal zone. So right here, this is just very nice, very healthy little retracement in the downtrend, moving right back into this 90-91 zone, which has been a pivotal level for a long time. So what I would expect here going into the week, without going into considerations about the RBA, etc., is as long as we can hold below, right, as long as the sellers keep on capping this 0.90 level, then we could test downside again. But if we start to get traction above, then I would expect this to continue in this healthy correction all the way back into this 200-day moving average. So depending on when we hit it on the week, but clearly into the 92, 93 range, that's what I would be looking at. If we get sold off early in the week, what I would look at is action at the 88.50s to see if that gets some kind of a bid or not. But clearly, I think that especially if more stops get hit, more shorts cover, the velocity of move is probably to the upside. Again, a bit, really depends what the RBA says, but at the moment, it's looking to me at like something like 100 pips to the downside, but a couple of hundred to the upside. So risk more to the upside. Clearly, it's still holding this this downtrend here, the tighter one. Shorts are coming in exactly where we'd expect them to come in. So really, it's all about these 0.90 level. What's going on Kiwi? Kiwi has been a bit of a sideways chop, very tricky chart. Let me just clear this up. It's really all about the 82.20 level. That's really the big level, trading inside a big chop, but that's the level to watch. That's the pivotal level, and it looks like it's holding a bit above. If you go back on a weekly, or let's say on the weekly, you see this level's been very, very important. This was a major swing high back in 208, right? And once we came back into this level, we got some aggressive moves. Really, this was really a Momo line. We broke through, got some choppy, acted as resistance for another move down, choppy action, then we moved down. So this has clearly been a very important level for the pair, right? And right now what's happening is this whole series of higher lows is kind of trying to base here at these 76.30s, 76.50s, and the shorts are trying to sell all this level right here to the upside, right? This repeated lower highs. So as you go back even on a daily, that's really what the big broad chop range, right? So that was that downside base we looked at, and the upside is this trend line coming down, and it looks like it's all about the momentum it's gathering around the 82.20. So as long as it holds above, I'd expect this upside to get tested. If it goes below, then we could test the downside, but really look at this as a pivotal level. And the way I would use it also is on any big data day, any event risk coming into the market, look at how it behaves at the end of day versus that line, right? Also end of week. That's the only line I would really look at, but I think it's very choppy. I still it looks to me like it probably needs to fail from a higher level if it wants to fail and it wants to test the upside again, but I'd be looking at that line, okay? Then what's going on Euro and cable? So Euro and cable, very nice action again. What we said on cable going into last week, we said again, it's all and only about the 63.50 to 62.50, and we can't get bearish unless we get a press below there, and we're clearly not going to get bearish at lows after we had this retracement into strong support. So what we said is that's the level you need to watch in the week. As long as we don't close below the 82.50s, we're expecting this to go back up into this previous support resistance zone, this pivotal area right here. I mean, if you go back even on a 1 hour chart, you can see how nicely the 28.50 level was supported. And clearly, you know, if you see this action intraday and you see this level being defended and not being able to print or break below that level, even though it had every chance of very aggressive action, it kept on having all the chances it needed to break back below that level. And if you see it can't even take it out, you know, stopping a couple of pips shy, it's very strong indication that there's some serious size trying to defend this area. So it's probably not a good idea to get aggressively short at lows. Not that something I would ever want to do, but still, look at this basing action. It's clearly pointing to the fact that if it needs to fail from a higher level, that it's not comfortable trading lower, that it's not attracting any new sellers at lows, it's only attracting covering or new buyers. Then we pop back up. These previous aggressive trend line that was trying to be held, previous resistance, access support on the news, bam, we take out some weak longs, clear the books, and shoot right back up. So very, very technical, very nice action. And as we go into the week, not a lot is changing. Right here, this is the pivotal zone, right? So if you want to call it, we've got to the upside, we've got these 64.50s, and to the downside, you know, call it 164s. So the 164.00, 164.50 is a big chop zone, right? And it's a strong resistance, and if the sellers are going to come in, this is exactly where we'd expect them to come in. So into Carney, waiting for Carney, keep an eye and see what's happening right here. As long as the market can keep keep the pair offered here, then we have a chance to test the downside. But if the sellers can't cap this, there's no reason why we can't move all the way right back up into the 66s. So going into the week, right, the upside for me is 166, looking at this as a potential risk to the upside. The downside, 102.50s, and we're hovering here. So clearly, again, it looks like there's more risk to the upside than to the downside for me. We'll have to wait to see what Carney says. That's probably going to be the big make or break, you know, and that's probably going to be the catalyst for either finally a break back below those 162.50s where we could get a move back all the way into the 159s, 158s, or if not, break all the way through those 166s, right? So that's going to be the key thing to keep an eye out on Wednesday. Euro, once again, this chart from last week, and what we said is it looked to us that this was clearly not managing to get traction to the downside. What we said is that the levels to watch for the week was 34.50, 34.00 as support, broader risk into all the event risk days and the data days, and to the upside 3600, 3650. Those were the levels to watch. There was a tighter range inside this broader range, so don't get fooled by velocity of move inside this range. This was likely going to get tested, but it was the outer range that was the focus for us. And you see here as we go in, this tighter range, we come in, downside defended, even on the data, we try and take out those lows, and aggressive buyers, shorts covering right here, right again. It's similar to cable. You see that action. It's not something you want to stay stubborn to the short side. The chances are if it fails, it needs to fail to the upside, and we're going to test higher. So bam, we came right back in. Sellers came in 3600 is exactly where we'd expect them to come in, but what happens? We come back down, we hold the breakout zone. Previous resistance, access support, and we're continuing higher. So going into the week, this is the key level, right? If the shorts can get it right back down to 3600 early into the week, right? What you want to look at is, are the bids still going to support the breakout zone? So that's going to be the key support. But as long as we trade above 3600, especially early in the week, the chances are the market's going to be very, very tempted to trip some stops at 3650s, and then taking those out would probably see a move back into the 37s. Again, a lot of people, we talked about this, Q4 last year too. A lot of people focused on the January effect, and a lot of people staying stubbornly short. I've seen a lot of people tweeting me, getting aggressively short here, saying that's it, we've put in our top for the year. And again, I wouldn't pay too much attention. Of course, there's certain things. Seasonality is very interesting, and it's good to have a chat about it and to discuss it, and maybe to keep it at the back of your mind. But don't let that cloud your judgment of the charts. Let the text, let the price action guide you, right? So we'll have to see. So this is clearly potentially still in play, this top, right? But the way this is trading, it looks like if it fails, it might need to take a test higher again. So going into the week, we're going to keep it very simple. 36 is pivotal. If it breaks down, is the breakout zone going to hold? If that holds, then still repeat a test to the upside. If not, we could go back into the 35s. But as long as we're holding above the 36, the pressure is going to be to the upside, right? So that's what I'm looking for going into the week. It should be an interesting one. I'm waiting to do a live webinar because, broadly speaking, we're still in ranges. So I'd like to see some kind of a breakout so we can redraw some charts. So maybe at the end of this week, let's see what happens. But as soon as we get some decent move out of these chop ranges, we'll do a live session on a Sunday so people can ask live questions. So that should be good. So again, thanks a lot for listening. Have a great end of the weekend wherever you may be, whatever you may be doing. If you like the content, don't be shy about sharing it or retweeting or whatever. Always appreciate it. Have an awesome one. Take care, and see you guys on Twitter. Take care, guys. Bye bye.